How do you see it? What should we make of the fact that those three FANG stocks have done nothing for, since the beginning of the year? I mean, they're either flat over the last 3 months or slightly negative.
Well, I don't think it's surprising. Towards the end of last year, I was talking about trimming the FANGs, and we did that. So I think during the pandemic, when there was massive liquidity and no story that people wanted to, felt comfortable with, you got money rushing into the FANGs. And now you've gotten some of that coming out and diversifying and going into other places in the market. So I think that's completely normal and to be expected. I like the valuations better down here, relative than I did before. But with some of the FANGs, we don't own all of them. In general, we're underweight. But I think it's to be expected. I think the market's searching for a leadership right now. I don't think it's clear where it is. There's a tug of war between the liquidity and people looking for stories and something that they feel comfortable that they're going to earn a return versus a very, very expensive market in general. Certainly there are pockets here and there that are attractive, but in general, the market's expensive. And in general, right now, the market S&P is 50% growth. So you're going to need growth. Maybe not the FANG specifically, but growth overall if you want the overall market to go up.
Let's talk about Netflix more specifically. I did mention it is one of the biggest losers today out of the 100 and also the S&P. Stock's down about 7%, maybe a little bit less than that at this point. It's certainly recovered off the lows. The subs were a problem. The pull forward, as you know, was rather significant because of the pandemic. Jenny, you say this stock was priced for, quote, delusion. Tell me what you mean.
When you have a company that reports as unbelievable numbers as they did, right? 24% earnings growth, they added 3 million subscribers, and it's down 7% on those earnings. The stock before that wasn't priced to perfection. It was priced to delusion, delusional expectations for that level of growth to continue to go into the future. One of the things that I've been thinking about a lot lately is how there needs to be a concert between the valuation of a stock and the story of a stock to make a great investment. And what we focused on a lot, particularly over the last year, is the stories. I always focus on the valuation. Maybe I need to incorporate the stories more, but you need to marry that valuation and that story to actually have a great investment. So let's not argue about what a wonderful story Netflix is. We all love watching it. I loved The Queen's Gambit. That was terrific. But the valuation was totally delusional. It was as if sunshine and rainbows were going to continue for the rest of eternity, and they're not at that level. There's competition here, and we're going to see that with all of the big super caps tech stocks as they start to report. There's competition. When you get that big a piece of the pie, everybody wants some. And they actually said on the earnings call, like, oh no, we don't think this was from competition. But there is a lot out there. And I don't think it's winner takes all. I think there's plenty of room for Disney and Hulu and Apple TV. There's room for all those guys. But there is competition, and that's meaningful. And when there is competition, there needs to be a correct valuation. And that's what they did not have going into this earnings call.
Okay,
so it was,
So I wrote this down. Yeah. I wrote that down, what you said. Yeah. Netflix was, quote, priced for a delusional level of growth.